This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. This is Beyond the Spotlight, a segment of Trade Spotlight that will highlight two or three markets that may become trading opportunities for this week. This week, beginning with Tuesday, May 26th, 2020, because of the Memorial Day holiday yesterday. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Let's jump right in to our first chart. This is June 2020 Canadian dollar. Taking a look at this chart here, I have a flat top triangle formation with 3 points creating the upper trend line and 2 points, almost a third, with Friday's trading activity creating the lower trend line. This is a trend continuation pattern, so we're looking for the market to actually break out to the upside. The only issue I have is the momentum is hooked down. There's the potential for this market to close or trade lower and close below this lower trend line. That would potentially set up a trade to the downside if the momentum is hooked over. Right now the trend is flat. This is the MACD indicator, and that's obvious with a sideways trading market going back to about the beginning of April, or a little bit before April. We've been in this narrow trading range, and it's only been tightening up, as you can see, as we're getting close to the apex of this formation. So this market can go either direction. A close above these three pivot point highs in this upper trend line that I drew off, which I would put it at that high 72.24.5, April 13th would be the highest high right there. So ideally a close below that high triggers a long entry. But we'd like to see momentum hooked up. So there's potential to see Tuesday morning Canadian dollar up above this trend line. But if the momentum isn't there, I just don't want to take the trade just yet. Stop losses would go on either side of the formation depending on which side we take. I did draw off potential targets. You've got the downside target, the 12-month contract low. That comes in at 68.20 from March 19th. And then the upside target would be to fill in this gap. This low right here that I'm showing on the chart, that low is 74.35.5 from February 28th. So pre-coronavirus. So potentially that can be the upside target. But we'll wait to see which way the market breaks out, and then we'll set up a trade to either go long or short. But this is a good opportunity for this week. Okay, the second chart is August 2020 crude oil. And I have drawn off here the beginnings of an inverted head and shoulders formation. So picture this, the head, standing on someone standing on their head. The 12-month contract low that was put in that crude oil was 2028 on April 22nd. The left shoulder is this pivot point low here. That low is March 18th, 24.20. So what I'm looking for is a pullback in the crude oil market. There was one on Friday. You can see, though, that this tail broke below 32, but we closed up at 33.65. Looking for a pullback eventually in this market to about that same, I drew off this horizontal trend line here, about to that 24, 26 price level. Ideally, that would set up a stronger formation. We've got a 20-day moving average ready to cross over a 50-day moving average. That is a bullish signal. So we may not get all the way down into this area before the market's hooking up to go long. Right now, though, the stochastic indicator, this is a momentum indicator, is showing that the momentum is a bit overbought and potentially waning here. And that's noticeable by the 6-day rally we had in crude oil, taking us from that 26 price level up almost to $36 a barrel. But again, first, ideally looking for that pullback. The trend is rather flat as well, so pullback, hook over in both of these indicators, and then we really want to get long the crude oil market. I think it has potential going into the summer. After Memorial Day, it's the unofficial start of summer driving season. So I'd like to set up positions in crude oil, probably with call options or future spreads because of the volatility and risk potential in this market. My upside target would be filling in this gap here in front of the 40. Strike price would be an ideal place for call options, or just on the other side at about $42 a barrel. And the third chart today is September 2020 orange juice. I also have a head and shoulders formation, but this is the normal variety with the left shoulder here that was made on March 31st at 121.50. The head, the 12-month contract high so far at a price of 126.40 from May 20th. So again, looking for a pullback in this market. I drew off a rectangle area here where I'm looking for the market to trade back to this potential support level. I've got that horizontal line drawn off there too. It's about the 107 mark. So potentially trading back down into here, or even just the 50% Fibonacci retracement of this big rally at 112.50. So somewhere in this range, I'd like to see a pullback in the orange juice market, and then you get a stronger neckline, because this is a steep neckline here. You get a stronger neckline, and then you have a stronger formation to go short the orange juice market. The momentum from the stochastics indicator is showing that it's overbought and has the potential to roll back over. Same with the trend. It looks to be exhausting up here. So there may be actually a shorter term trade catching this move, because this is quite the move from where we are here, about 125.5 down into these levels. We could potentially profit off that first move lower before we get a bounce back to create that right shoulder, which would be a stronger formation. But we can take potentially a quick short-term trade, perhaps a momentum entry technique, a break of this low here that is 122.75 from May 20th, or if we get some more trading, another test of this trend line, and then a break of this trend line, because we only have a few points on it. We'd love to see another point up here, and then a break and close below that trend line. That can trigger a downside entry as well. And then our target would be down to this support level between that 107 and that 112 half range. So we can trail a stop on that until it gets down into this region here, and then look to set up potentially a long entry. That's September 2020 OJ. Quick look at what the trade spotlight looks like. This is the trade spotlight spread segment. You have a timestamp so you know when the trade recommendation was sent out, a write-up of the recommendation, the thoughts behind the trade, the precise entry and exit orders for each trade, so you know the risk-reward parameters, any pertinent information like margin requirements or expiration dates, and a chart that you can enlarge to view. If you're not following the Trade Spotlight, I encourage you to do so. Just go over to the Daniels Trading webpage, click on the Advisories tab, and under Technical Analysis, you'll find Trade Spotlight. You'll see a write-up, some recent posts, and then you can subscribe to the Trade Spotlight advisory service free for 90 days. It is a free service that I provide to my brokerage clients. If you have any questions on the charts or just the markets in general, feel free to reach out. These are all my numbers. You can also email me, tradespotlight@danielstrading.com. Thank you for taking the time listening, and happy trading.